Mastercard Installments serves as a bridge between traditional banking and the modern convenience of buy now, pay later services by integrating installment options directly into the card you already carry in your wallet. Instead of navigating the fragmented world of third-party apps like Klarna or Affirm, this framework allows your existing bank or credit card issuer to provide flexible payment plans for your purchases. It functions as a global platform that essentially turns your standard debit or credit card into a versatile financing tool. This can happen in two primary ways depending on what your bank supports. You might have a pre-purchase option where you choose a specific installment plan right at the checkout screen, or you might utilize a post-purchase feature. The post-purchase option is particularly interesting because it allows you to look at a large transaction you made yesterday or even a few days ago and convert it into a structured monthly plan through your banking app, providing a safety net for your cash flow if you find yourself experiencing a bit of buyer's remorse. Because this runs on the massive Mastercard network, the availability is nearly unmatched. You can use these installment features at millions of merchants globally, effectively anywhere that Mastercard is accepted, including in-store locations through digital wallets like Apple Pay and Google Pay. The repayment options are set by your specific bank, but they commonly include splitting a purchase into 4 interest-free payments or choosing longer terms ranging from 6 to 12 monthly installments. The financial specifics like interest and fees are entirely dependent on your card issuer. Some banks might offer a 0% interest rate with a flat monthly fee, while others might apply a reduced annual percentage rate or a PR to the balance. One of the biggest pain points this solves is the clutter of managing multiple financial accounts. Since the installments are tied to your existing card, you get consolidated billing where everything appears on your regular bank statement. You are also backed by the trusted security of your own bank and Mastercard's zero liability protection, meaning you do not have to share your sensitive financial data with various third-party fintech companies. Furthermore, while many basic pay and 4 apps do not report to credit bureaus, these bank-led installments are much more likely to be reported. This means that if you make your payments on time, you are actually helping build a positive credit history. However, there are several risks and drawbacks to consider before jumping in. The most significant issue is that terms are often vague and inconsistent because Mastercard provides the technology while the bank sets the rules. This means one bank might offer you a great deal while another might charge a 15% APR on the exact same purchase. You also have to watch out for potential fees. Even if a plan is advertised as interest-free, banks often charge an origination fee or a monthly plan fee, which can sometimes end up being more expensive than the standard interest you would have paid otherwise. Additionally, these plans usually impact your credit limit immediately. Even if you are splitting a payment, the total amount of the purchase is typically blocked from your available credit until it is fully paid off. There is also a psychological risk regarding overspending. Because the feature is so seamlessly integrated into your card, it is very easy to lose track of how many active plans you have, which can quickly lead to a debt snowball effect. Unlike some fintech apps that are more lenient, getting approved for these plans through your bank might trigger a hard credit inquiry, which can temporarily dip your credit score. This tool is generally a pro-consumer move for those who have a good relationship with their bank and want to keep their finances in one place without downloading new apps. It provides global protection and convenience, but it is not a magic fix for those with low credit scores who might find it harder to qualify compared to other services. You must also remember that these plans generally do not allow you to spend more than your current credit limit. To summarize the situation, Mastercard Installments offers a highly convenient and secure way to manage your cash flow through a brand you already trust. It eliminates the need for third-party logins and helps consolidate your debt into one monthly view. However, the risks are significant if you do not read the fine print. You face inconsistent terms across different banks, the potential for high APRs or hidden monthly fees, and the risk of a hard credit pull. Most importantly, you must be disciplined to avoid the debt snowball that comes from having too many easy-to-access payment plans active at once. Always calculate whether the fixed fees or the APR offered by your bank are actually cheaper than your standard card interest before committing to a plan.